Asian markets have obviously woken up to the end of month trading on Friday. It did see the Dow and the S&P again making ever so slightly highs, but here in Asia it was all about what we saw yesterday in China. The official PMI data coming in slightly ahead of expectations at 50.8. That means that the Chinese economy on the official side has still been in expansion for at least the last 9 months, and we did actually see some good turnarounds in 9 out of the 13 subcategories. So that was a really good development. However, we haven't actually seen the Chinese market being able to respond to that. It's obviously the Dragon Boat Festival this weekend and they've got a public holiday today. So there hasn't been a huge gauge for that. What has been interesting is that Japan continues to power ahead. The Nikkei has done incredibly well, and over the lunch period we've seen the futures also starting to tick up, and that breakout between the yen and the Nikkei now looks quite solid. It's no longer a fairly strong inverse correlation, but it is very good to see that from a bottom-up view, Japanese countries particularly are doing quite well, and that really has driven that. What has been disappointing, however, has been data coming out of Australia. It was quite weak indeed. Building approvals and also house sales were well down, and that, coupled with the fact that we are continuing to see really poor numbers on the iron ore side. They have not seen a bounce, making 91.8 US a tonne, has seen the Aussie dollar absolutely breaking through 93 cents and falling away quite heavily, down around about 0.5% through the Asian trade. So that's certainly where we're watching today. It's certainly been an interesting move, and a lot of currency traders on Asia have been watching that Aussie dollar. That's the most disappointing part of this news, and we'll be watching very closely tomorrow to see how China reacts to their PMI numbers. Asia tomorrow, we'll probably be watching two parts to their whole trade. Overnight, we're obviously going to see the ISM manufacturing numbers coming out of the US. They do look at, again, at being relatively positive and breaking out of that winter trend. Tomorrow, again, will be about Australian data. We'll be watching what goes on at the RBA. I don't expect it to be anything that interesting. I think you'll probably find that, as usual, we keep hearing that rates are on hold, and I think they're going to give the clearest signal yet that rates in Australia will probably remain as they are at 2.5% for at least the next 6 months. So that may put a little bit of support under the Aussie dollar. Every time we've seen them talk fairly neutrally around about what goes on with rates, we've seen a positive news for the Aussie. Today here in Asia, it has been quite a weak day for the Aussie, and that may see a bit of strengthening tomorrow. But we did see housing approvals at one of the weakest levels we've seen in around about 6 months. We also saw the house sales numbers also on a lower end. So all of that was fairly negative. Looking to the rest of the region, there's not a huge amount of news, but we will get to see China's reaction to their PMI data on the weekend, and then we will also get the final HSBC numbers from last week's flash figures. We did see a nice reversal over there in orders, exports and also output, which was all a reversal from their previous months, and hopefully we can see a revision up of that. If there is a good positive move there, that may actually see commodity prices and also the Chinese gauges all moving in a positive direction, which hopefully will see the Asian region up as a whole.